Hello everyone, it's Maggie. The 2024 presidential election is almost here, and many of you might be thinking about how the outcome could impact the real estate market. Over the past few years, we've seen home prices rise significantly, making real estate a key topic of concern for many voters. Both Trump and Harris have made housing a major part of their platforms, and that has a lot of people wondering, how do elections usually affect the housing market, and what can we expect this time around? I've spent some time digging into the data, and today I'll share what I found. We'll start by looking at how past elections have influenced the market. Then I will dive into what makes 2024 unique. Finally, we'll break down Trump and Harris' plans and see what they could mean for buyers and investors. If you're planning to make a move in real estate, you won't want to miss this. Let's talk about what typically happens during an election year. Historically, home sales tend to slow down a bit in the months leading up to the election, especially October and November. Ali Wolf, chief economist at Zonda, knows that home sales don't change much compared to a non-election year. But November is the one month where things usually slow down. So what's happening here? People tend to hold off on making big decisions until they know the election results. But here's the good news. That slowdown is usually temporary. In fact, data from HUD and the NAR shows that 9 out of the last 11 elections saw home sales bounce back in December or the next year. Now, what about home prices? Do they take a hit when it's an election year? Not really. According to Ryan Lundquist, a respected residential appraiser, an election year doesn't change the overall trend in home prices. In other words, the upward momentum we see in prices generally continues. Data from NAR backs this up. After 7 of the last 8 presidential elections, home prices actually rose the following year. The only exception was during the 2008 financial crisis, which had nothing to do with the election. So unless there's some major economic event, we shouldn't expect drastic changes in property values. Interest rates are another thing people worry about, and it's true. Mortgage rates are closely linked to the economy. Freddie Mac data shows that in 8 out of the last 11 election years, mortgage rates dropped from July to November. That's encouraging news for buyers because lower rates makes home more affordable. Most experts are predicting that rates will continue to trend down through 2024, which could give buyers a bit more purchasing power. Lisa Sturtevant, chief economist at Bright MLS, reminds us that the housing market doesn't tend to look all that different in presidential election years compared to others. So while we might see a few temporary shifts, the key factors remain interest rates and the strength of the economy. Now, let's dive into what makes this year so unique. Home prices are at record highs, and housing affordability is a huge issue. According to the Pew Research Center, a whopping 69% of voters say they are very concerned about the cost of housing. This means both Trump and Harris have had to come up with specific policies to address it, but their approaches are very different. Trump's plan focuses on cutting taxes and reducing regulations. He argues that heavy regulations make up 30% of the cost of a new home, and he wants to change that. His idea is to open up parts of federal land for large-scale housing developments with ultra-low taxes and fewer regulations to attract investors. He also ties housing costs to immigration, suggesting that deporting undocumented immigrants would actually free up housing. But economists have pushed back on this. Dan Merrick, a construction CEO in Texas, explains that the construction industry depends on immigrant labor. If we lose those workers, building costs could go up, and that might actually hurt the housing market. Trump has also pressured the Federal Reserve to lower interest rates before.
Do it more, do a little bit more.
And he's likely to continue doing so if he wins, which could benefit buyers. Harris takes a very different approach. Her focus is on making housing more affordable for everyone. She plans to build 3 million homes in her first term, working closely with private companies to get it done. Her plan includes expanding low-income housing tax credit and setting up a $40 billion fund to support affordable housing projects. She's also proposing a $25,000 down payment assistance program for first-time buyers to help more people get into the market. Plus, she wants to regulate rent increases to keep housing within reach for many more families. Brian McCabe, a sociology professor at Georgetown, points out that the housing crisis now affects middle-class families, not just low-income households. That makes Harris' approach appealing to a broader audience. So, what should you expect? In the short term, there may be a slowdown in home sales as we get closer to the election. but historically, the market has bounced back quickly. If you're considering buying, this might be a great time to start looking. In the long term, housing prices will still be influenced by interest rate, economic conditions, and development trends. It's smart to stay informed about the candidates' plans and think about how they could impact your real estate investments. That's all for today's discussion. If you're into real estate or thinking for investing in the Seattle area, be sure to subscribe for more updates. Thanks for tuning in, and I'll see you in the next video.